Hello traders, this is Chris Buss with Traders Profit Compass. It is 7 p.m. March 16th after the Fed announcement this afternoon. What I wanted to do is take some time to update you on where we stand on the most important sectors of the market. So what I'm going to do is spin through the larger sectors, give you some levels to alarm. I think the stage is set. It's not a given, but the stage is set for a potentially nice rally. So I want to give you guys some levels to alarm in case it pans out tomorrow, Friday, and then into next week. I say that with a caveat. Fed days are notorious for head fakes. We saw a rug pull out of the Fed announcement and then a massive rally coming out of that. So we know we've got a big March OPEX on Friday with a lot of delta rolling off in the option chain. So that could potentially be fuel to a potential rally. For instance, if we can push higher, there may be a lot of short covering for people that a lot of that today, that rally today was, I'm sure, a lot of short covering, also a lot of buying, I would imagine. So if there gets to be a scenario where the advance extends tomorrow and into Friday, there's going to be a lot of people that want to get out of their shorts when they realize that they're on the wrong side. So let's start out with the most important sector, and that is technology. We see that Apple and Microsoft are, almost half of the index. So it's always good when you're trading these sectors to realize what the big dogs are, because these are cap weighted sectors. So obviously the biggest companies are going to carry the most weight. And these sectors are nice vehicles if you don't have the the wherewithal or the time to play individual stocks. These are good vehicles because you can see, you're getting 44% of Apple and Microsoft, and if those are going up, XLK is going to go up. It's just that simple. So let's take a look at it here. We had this falling wedge. We've got some bullish divergence in place at the, we made a low here with PPO and RSI making lows up here. Then we fell to lower levels on price, yet PPO and RSI were higher. So that sets the stage for a rally with that bull divergence in place. We're still within the wedge. We need to get a breakout above this 151.75 area, and then there will be an immediate test. We've got the declining 200 and declining 50 above. So you would have to make a decision on how you want to play it. One way is the following. Set an alarm, 151.75, and it triggers and you buy it. And then you see what happens up at the 200 and at the 50. Another way, you say, Chris, you know what? Big downtrend. It looks promising, but I want to have price prove it. That's perfectly fine as well. If price can recapture the 200 and recapture the 50 right here at 155, set your alarm there and then be ready to go if price proves it and can break out. And then you would have one final hurdle, and that's this large volume over price bar right here that comes in at 159. And if price can overcome that level, 159, then you got a lot of running room to the upside. So I think the key levels, again, are 150.75 and 155. depending on how you want to play it. Moving on to healthcare. Healthcare has been in this large trading range from 124 up to 135. We came down and tested that low, could not break it in late February, came up, came back down. You see the price action, but now we're threatening the top of the trading range. So what I would do here is simply alarm 135 and be ready to go on a potential breakout. Once you break out from 135, you got a lot of running room, because that would be really bullish. Why? Because you'd be breaking out of essentially an $11 range. So your measured move will put you up at 146-ish. Let's just call it the prior high at 142. I'm sure you'd be quite thrilled with that if that panned out. So I think this is a simple trade. Alarm 135. You get the breakout, you take it long, and set your stop just below. And you can see here that RSI is breaking out above 50, and PPO is making a run to break above the zero line and get in positive territory. And those would be both very supportive of a move higher. Financials. Big move today. An important move too. Why? Well, there was a gap up and then a continuation up about 3%. But in the process, recaptured the 200, which is right here down around 37.50, and now price is up against the 50 right here at 38.50. So what I would do is set yourself an alarm. Notice the large volume over price bar right here, biggest on the chart, most important level, certainly within this trading range. So if it can take out the 50, take out the large volume over price resistance here at 38.75, got a lot of running room. And my target would be 40.50 at the top of the box. You can see here we just had this bear trap false breakdown, and remember our central technical analysis tenets. You break out of a trading range and you come back in. Where's your target? Bottom of the box. Found it. Another fake breakout. Where's your target? Bottom of the box. Found it. Fake breakdown. Re-entering the box. Where's your target? Top of the box. Doesn't work every time, but it works a lot of the time. And given all these moving averages would be recaptured, taking out the large volume over price bar, I think you got a good shot at finding 40.50. Now you say, well, that's only like, what is that? $1.50. You'll find when you get in the option chain, these are not going to be expensive options. So instead of, getting 3, you can get 5 or you can get 10. They're not going to be very expensive, of course, depending on when you get them. I would give yourself some time to let the trade work. I mean, I wouldn't get it, for tomorrow, I wouldn't get it for Friday. I'd give yourself at least a couple of weeks for the thing to play out. But you can leverage up when you see that you've got a good setup and the options are not that cheap. Use your own discretion, use your own position sizing rules. But normally what you would do is you've got, your account size, and you know what you're comfortable with on any one position. So just size it accordingly. And if it's, if it's 4, if it's 7, or if it's 12, whatever it is, stay within your limits. But I would not be shy. I would give it a full position because I really like this setup, having, like I just said, recovered all the moving averages and breaking out towards the top of the box. Communications, this is just like on technology. Facebook and Google are 44% of the index, and what you're seeing here is the Facebook disaster. Google has held its own, down a little bit, but nothing like Facebook. So this thing has really fallen out of bed, along with the internet stocks and all that stuff. What I've done here is, in this light blue color, I've put on the Fibonacci retracement zones, and you can see that a 38% kickback or retracement rally would bring you right up here to 69.65, and not coincidentally, that aligns perfectly with the declining 50. And then if it can break above that level, then you're looking at a move up towards 71.50, and then potentially all the way up to 74, where it will meet this big downtrend line. So tomorrow and going forward, I think the level to alarm is this declining 20. If you wanted to give yourself a little margin of error, I would alarm 67. 67 would be your level to alarm. And if price can break above the 20, take out 67, I think you got to run to 70 or better. And then the big test will be at the declining 50. And if it were to take out that, I think you got a good chance at 74 if all the stars align. Moving on to XLY, 24%. Amazon, we had this big falling wedge here. You can see today we made some progress getting out above that. I think the level to alarm here is 177, but very similar to the technology, the XLK, you've got some overhead resistance here. You've got the declining 50 at 180. You've got the 200 here coming in at 183 and change. So I like the setup, but it's not going to be as clear sailing as some of the other sectors, just because you've got these declining moving averages and large volume over price bars. But if you wanted to take a shot, I think the level to alarm is 177. And you can see the RSI is trying to make a break above 50, which would be positive. PPO has a long ways to go, but it has put in a bull cross down here low. So even if it made a run up to 0 and ultimately failed, that's going to put price, much higher. If RSI breaks out and PPO has its bull cross and moves up towards the 0 line, you'll get a lot of price movement there if that pans out. And I want to make a note, all the sectors that I've covered so far and are offensive sectors, and those were the outperformers today. A rally that is suspect would be a rally where utilities and REITs and staples were your outperformers. That wasn't the case today. It was all the offensive sectors. And that's what you want to see in what I call a legit type rally, where all the offensive sectors are working in gear with none of them, none of them really dogging it. So all these sectors were up like 3%, which is what you want to see. So anyhow, back to XLY. If Amazon is working, XLY should be working. I would mark 177 on your chart. XLI, very much like the financial setup where big trading range between, let's just call it 105 and 98. We've broken above this downtrend line. We had the fake breakout. We broke out, came up to this midpoint at 101, was rejected there at the 50, came in for a back touch of 97.50, and then we broke out of this downtrend line. But more importantly, we recaptured the 200 and we recaptured the 50, and now we have this high volume over price bar here, comes in right at 101 at the midpoint of the box, fake breakdown, re-entered the range, target top of the box, 104.50, 105, something like that. Alarm 101, take it long if you get the signal, and you could set your stop back at the 50, which is at let's just call it 100. So you take $1 of heat for a potential $4, $5 move higher. That's a very good risk reward. That's a chance I would take every time. So set your alarm at 101. I like it long on a breakout above, having recaptured all the moving averages and moving to the top of the box. I like that trade. I wanted to go over energy. We know we had the big run up. We know we had the big pullback. Price is at an interesting spot. I think ultimately energy moves higher. We are back at trend, but that, energy moves higher. That's all relatively speaking. Higher a year from now, yeah. Higher 3 weeks from now, I'm not sure. I think if there's any kind of breakthrough in Ukraine, you're probably going to get a sell-off. That being said, we are at what I would call pretty good support. You've got the trend line, and you've got this high volume over price bar below that comes in at 69. So I think at most, short term, and without any Ukraine breakthrough, you might see a pullback into 69, but I would really think that this trend line and 70 would hold and then reaccelerate higher. You do have a gap to fill in here that I haven't shown. That's not a high conviction trade, but technically I do like this setup here. I would give that time to work and certainly respect any stops that are hit, because it has been volatile. I would not go out over the deep end on that trade. It's not as strong a trade right now as some of the other ones, XLI, XLF, the ones we've already gone over. Want to wrap up with materials. This is your fertilizer. This is your copper, lithium, uranium, all that kind of stuff. Specialty chemicals, commodity chemicals, all that kind of stuff. We know we had the big ramp, and then we had the big pullback, had this downtrend line. We were up 1.5% today, not as much as the others. We came up for a touch of 84.50 and was turned back. But we got this, we recaptured the 200 and we're right here at the 50. I would alarm 84.50. And if you got a breakout there, I'm not going to say it's clear sailing, but you can see the resistance falls away once you break above 84.50 on this chart. And I think you got a good shot at 87.50. And with any luck, if you got a breakout there, it's going back to the highs at 91. So let's just do a quick recap. Take the rally out of the Fed with a grain of salt. That said, you got to respect price. Price is truth. And I think the stage is set for a rally, potentially, into week's end, maybe even into next week, with short covering and oversold conditions. So I like the setup, but the setup's got to pan out. There's a lot of setups that don't pan out. So set your alarms, be ready to go. If they trigger, take the trade, respect your stops, expect a lot of volatility. Oh, that was the other thing. We saw a nice drop in volatility today. First time under 30 in quite some time for the VIX. And, there's guys out there. Bill Luby is a guy that's really sharp on volatility. I think he put up a post on occurrences where the VIX has been above 30 for 9 or more days, which is the thing we just came out of, that there's outsized performance out of the indexes coming out of a situation like that. So there's that little factoid for you. As long as VIX is falling and you see price react to it to the upside and you get your alarms, trust the price, set your stops, and let's see how far it can go. So tomorrow morning, bright and early, we'll go through all the indexes and fat man names individually. So be ready for that. If you're new to the channel, thank you so much for spending some time. I hope you got something out of it. If you appreciate the analysis and having the levels to alarm and everything, please hit the subscribe button and the alarm bell. Jump over in the show notes. Find the link to the blog site where you can drop in your email address, join the team, and get everything that I send out morning, noon, or night right to your email box. You won't have to hunt for it, and you'll be totally plugged in. And as a bonus, you'll get an invite to our trading room where we'd love to have you hear your ideas, or you can just look at everybody else's ideas. That's what a lot of people do. So we'd be glad to have you there. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.